Okay, so let's dive into one of the absolute hottest and honestly most debated stocks out there right now, CoreWeave. This company really is the perfect snapshot of all the excitement and, well, all the anxiety around this AI gold rush we're in.
I mean, just look at that number. Since its IPO in March 2025, the company's stock has just gone vertical. We're talking about a frenzy on Wall Street, the kind of thing that makes early investors look like geniuses.
But, behind those incredible numbers, there's a really fierce debate going on. Is CoreWeave's insane growth actually built on something solid, or is this a classic bubble just waiting for a pin?
To really get what's going on here, we have to go back and look at CoreWeave's wild transformation. Seriously, their story is like a masterclass in knowing exactly when to pivot.
This is just such a smart, almost perfectly timed move. Think about it. They literally rose from the ashes of the crypto winter, took all that hardware, and dove headfirst into the AI boom at the exact right moment.
So what's their secret sauce? Why are they so hot right now? Well, unlike the big cloud giants who kind of do a bit of everything, CoreWeave built what is essentially a specialized high-performance gem just for AI. Their liquid-cooled data centers and, this is key, their priority access to NVIDIA's best chips give them a huge technological edge that AI startups are just lining up for.
Okay, so let's look at the bull case. Why are so many investors just incredibly excited about where this company is headed?
The numbers are, well, they're explosive. We can see it right here. Revenue more than doubled in just 1 year. And their operational strength, that's what adjusted EBITDA kind of measures, like a snapshot of profitability, is growing even faster. These are the kinds of numbers that make Wall Street sit up and pay attention.
So the really crucial point is where all this growth might be going. Some analysts are actually projecting that if they keep up this pace, CoreWeave's revenue could balloon to over $18 billion a year by 2027. That is a truly staggering number.
And the company's CEO, Michael Trader, is making a really bold claim here. He's not just brushing off the bubble fears, he's arguing that this is the birth of the next internet, a massive foundational shift, not some speculative craze.
But okay, for every bull out there cheering those growth numbers, there's a bear pointing to some pretty serious risks that are kind of lurking just under the surface.
And here's the big paradox. Even with all that soaring revenue, the company is still losing hundreds of millions of dollars every single quarter. And that disconnect, right there, is what has the bears so freaked out.
So why are they losing so much money? Well, this staggering number is the main reason. That's their planned capital spending for 2025 alone. They're spending a mind-boggling amount of money, mostly funded by debt, to build out their data centers as fast as humanly possible.
This analogy just perfectly captures the bear's biggest fear. CoreWeave is taking on these massive financial promises based on future growth. It's a really high-stakes bet that demand won't just continue, but that it's going to accelerate like crazy.
And this massive pile of debt isn't just a number on a spreadsheet. It comes with some very strict rules. These things, debt covenants, they're basically tripwires. If the company's growth slows down or they just hit a rough patch, they could suddenly find themselves in a really, really tough financial trap.
Now, this whole story isn't just about one company. CoreWeave's situation really forces us to zoom out and ask a bigger question. Are we seeing a potential bubble in the entire AI infrastructure market?
The numbers are just wild. The giants of tech are pouring $400 billion a year into building AI data centers. Now, on one hand, that creates huge demand for companies like CoreWeave. But on the other, it introduces this massive, systemic risk if that spending ever suddenly cools off.
This popular post from social media really captures a key criticism. You've got giants like Microsoft and NVIDIA investing in startups. Those startups then use that money to buy services from CoreWeave. CoreWeave then turns around and buys chips from NVIDIA. Critics argue this whole circular financing thing is just inflating valuations for everybody in the ecosystem.
And we've kind of seen this movie before. Back in the 1920s, John Deere's stock went through the roof on all the hype around the tractor revolution. But a boom that was fueled by overproduction and a ton of debt, well, it led to a painful 90% bust. The parallels to today's massive spending and debt in the AI space are frankly a little hard to ignore.
So, okay, with all this conflicting info, what are you supposed to take away from all this as you watch this fascinating story play out in the market?
Well, here are 3 really crucial things to watch. Don't just follow the stock price hype. Look at the actual earnings reports. Are they hitting their targets? Keep a super close eye on their debt. And maybe most importantly, check their utilization rates. They absolutely have to prove their expensive new data centers are actually full of paying customers.
And look, the classic advice is classic for a reason, especially in a market this wild. The key is just to avoid putting all your eggs in one basket. You could balance a high-growth, high-risk play like CoreWeave with more stable companies, maybe even the utilities that are selling all that power to the data centers in the first place.
Ultimately, CoreWeave's story is really a miniature version of the entire AI gold rush. It forces all of us to ask this one fundamental question. Are we watching the construction of the next internet, a durable revolution that's going to fuel decades of growth? Or is this a speculative bubble, totally inflated by hype and debt, that is simply destined to pop? The answer to that is going to define the next era of technology.